Do you know 2026, the year large banks, institutional investors started getting into DeFi framework? Do you want to know what exactly happened? Hello, I am Mani Malarvan, and in this video, we will look into what changed in 2026. Why suddenly the rush for the institutional investors to getting into the crypto and trying to utilize the various blockchain networks. We will look into the regulatory framework and what changed so that from the Web3 marketing agency point of view, you can understand what is going on and how you can position your Web3 marketing agency for the near future. See, the main change that started happened in 2026 is the passage of various rules and regulations in various countries. One of the main reason the institutional investors was not interested in getting into the crypto is because there is no set and legal framework. That shift happened in 2025. It started in 2025. Now it is in full swing. Various countries, both United States, Europe, and UK, they all are forming their various rules and regulation for the banks to follow and adapt the crypto world. So this makes the institutional investors, the large banks, to properly navigate the crypto world and trying to utilize these legal frameworks and adapt their networks. In European Union, MiCA, it's they created a markets in the crypto assets. It's basically it requires the crypto asset service provider or otherwise known as CASPs to hold a formal license, meeting strict reserve requirements and follow transport disclosure rules to offer custody and exchange services safely for their customers. So there's a framework formed. And because of this framework, large institutional banks and other trading firms started looking into the crypto and start integrating with their traditional assets and networks with the crypto assets and networks. So that is in the European Union. And then in the United States, Genius Act formed. It's basically it creates a stable coin framework so that banks can start issuing stable coins and they can adapt what they need to do, providing the legal framework for various stablecoin issuers in the crypto world. And then that crypto assets can also be used by the traditional banks and creating stable coins in the crypto market. And because of that, there is a various private entities and public entities started looking into the crypto market and they started integrating their network. In our channel, there are various videos we discussed about the stablecoin and the Genius Act. If you need more information, please go and watch those videos that will help you to understand so that you can position your marketing company for these type of integrations. And then in the United Kingdom, FCA crypto asset regime formed. It's basically enforcing a same risk and the same regulatory outcome that standards for the regular banks and now the crypto markets and the crypto industries needs to follow that. So they created the framework for that. And then in the Singapore, Mass Payment Service Act has been passed. This requires formal licensing specifically tailored for digital payment token services, allowing institutional access to the primary markets through the regulated networks. All these legal frameworks providing the both the banks, the traditional investment institutions, and the crypto markets to form a joint venture so that they can able to use the crypto networks with the traditional networks. So one of the main blocker for the banks and public institutions to adapt to the crypto network is the counterparty identification mismatch. It's basically in the decentralized architecture. All the accounts and everything is monitored by pseudo-anonymous crypto addresses. if somebody is having a wallet, they can able to start performing a transaction. You really don't know who the physical owner of the address. Anybody from any entity, illegal, legal, they can able to use the any of the blockchain networks right away to send money for bad purposes, to send money for good purposes. So there is no legal protection for the traditional institutions to get into the decentralized blockchain networks. And that is the main difference for the banks not to enter into the crypto world. And that is changed because right now with the third party services, you can able to identify who the person having the wallet, and you can able to identify that person. So for their legal requirements, all the banks, traditional banks and investment companies, they can able to protect their networks and assets and their investors by following this. And that's the main blocker, and that is being uh, changed 2026 because of the legal framework. And the workaround, how what they created is we discussed about the CASP and WASP and custodian networks. It's basically if I am having a wallet, I cannot directly use the wallet to start transacting in the crypto. I need to go through a off-chain verification process so that my informations will be held by a third-party custodian that is legally regulated, and then the banks can able to use their network to verify who the person is and whether I am legal to transact, and all those can be protected, and the regulated bank can start using their assets in the crypto, and that's being solved now. And then the another blocker is the containing the smart contract liability. In the crypto world, all the associated intelligent and the logic and everything is living in a decentralized network. There is no monitor, nobody is monitoring it. If you perform a transaction, it is going to execute the transaction. It's not going to see who the actor is, who the person, whether the person is legal, illegal, nothing. Anybody can use the blockchain to start transacting, and that is a major blocker for traditional banks. And because of this all these laws are passed, now they can able to create a private blockchain network with all the smart contracts and everything all are audited, and that's been deployed in their private networks. And using that, anybody can able to transact, and they can able to send money from their wallet to a traditional bank, and they can able to get the money from that bank to their wallet, and all those integration happened. So this is the second major blocker, and now with the legal framework in various countries, this is pretty much solved. Still, those legal frameworks are being worked out, and in the days come in 2027 and beyond, there will be more and more companies will start utilizing this network and trying to figure out how they can integrate their traditional banking assets with the crypto assets. And then the walled garden, the reality of institutional entry. See, in the public pool, you can able to transact without any private network, without any identity. You can able to send money, you can able to receive money. So that is none of the banks, those who have the legal authority or legal framework they need to follow, they can't get into the public pool. So to avoid that, now permissioned variant pools are created, so that using that, the public counterparty ID is changed into the permissioned wallet address. So you know the wallet address. Based on the wallet address, if the governments and other entities coming to the bank and asking who performed this transaction, they can able to identify the person, and they can able to provide those details. And then the auditability. For insurance purpose, the banks needs auditing way, so that they can able to identify the paper trail, the money trail that happened from one network to another network. So now with the counterparty ID, they can able to clearly identify and they can able to protect their assets and thereby increasing the freedom of people to use the crypto and the traditional banks, and that integration happens. And because of this, there is a public restricted and banned person cannot use banned countries cannot use certain networks based on the legal network. See, one of the primary reason the decentralized blockchain came is to want people to start using it without any government restriction. There are pros and cons with that approach, yes, but the legal person can able to use it. But the problem is there is always the issue of a bad actor getting into the blockchain and start transacting the money. And that's the main reason the institutional investors, banks, those who have a legal protection with the country they are situated in, they were not interested in getting into the crypto. And now, because of the legal framework, that is completely changed. And then, because of the legal framework changed, the technology solutions have been created to bridge the gap between traditional banks and then the crypto network assets. So those two are all now integrated using various technologies. So, so the synthesis is the dual visibility gap now that's being solved in the institutional wallet. Now it's a legal entity for anybody to own a wallet. And if you want to use the banking networks, you need to identify yourself. That provides the clear legal authority for the banks to identify the wallet from which who the user is and what exactly they can able to do on the network. And by doing that, they are able to satisfy their compliance regulatory requirements that they need to work with their government, because all the banks, the traditional institutions, they don't exist in vacuum. They exist in a country and they have to go through the legal laws, either city law, state law, country law, whatever the laws they have to do, they have to go through that. So now with this dual arrangement, they can able to protect their networks, their assets, their customers, and also provide legal services, banking services for the customers, those who want to use the crypto network. So the same way how these banks are getting into these complaints, marketing agencies, Web3's marketing agencies are trying to figure out how they can able to bridge the gap between the Web2, W2, in the Web2 technology and then the Web3 technologies. So we will look into it, how the Web3 agencies can use the same approach so that they can able to grow and serve their Web3 customers. One of the main issue in the Web3, we say, we have seen this in our previous videos, how the ad click landing page in the Web2 and then how it gets interconnected in the on-chain in the Web3 world, how you need to bridge the gap. If you need more information, I'll provide the link in this video, and also you can go and visit our other videos in this channel. Without the bridging the gap between the Web 2 and Web 3, there is no way a Web 3 marketing company can able to identify and provide value to the customers. The only way is you need to have a proper tools and technology to collect the data both from the Web 2 side and the Web 3 side and the on-chain transactions, whatever blockchain you want to monitor, you have to collect those data and connect those two data to provide value to your customers in your marketing campaigns. So within Analytic Kit, we have an attribution tool platform. Using that, you can clearly set a attribution platform that tracks the customer from the first entry point, clicking add in the web 2, and then coming into your landing page, and then ultimately connecting the wallet and performing a transaction. So we have many videos in this channel. If you need more information, our attribution platform, you can go and see it. So we clearly explained what the marketing agencies can benefit from this type of bridge and what they can do to improve their marketing campaigns by solving various issues for their customers. The 2026 is the era that the traditional banks started utilizing crypto. Similarly, 2026 is going to be the main era for the Web3 marketing agencies to clearly articulate the ROI for your marketing campaigns. If your company comes to you and asks for a clear ROI, you need to have a proper tools to understand what is going on in the Web2 side, what is going on in the Web3 side, so that you can connect those two data and provide a clear cut goals, sha- dashboards, graphs, whatever your customer needs, you can able to identify and provide proper value to your customers. And also, we are working on integrating AI agentic technologies to our attribution platform, Web2 and Web3 attribution platform, so that you can clearly identify what is going on using the agent technology. Also, you can ask questions and get answers about your particular marketing campaign for a customer. So that's all I want to discuss in this presentation. If you have any questions or comments, please send us an email or post a comment in this YouTube video. And if you need more information about our product, you can go to analytickit.com, our website, or you can go to app.analytickit.com and register yourself and start using our attribution platform. And we will be happy to help you if you have any question in the registration process or anything else. Thanks, appreciate the time. If you like this video, please subscribe to this channel and forward this video to your friends and family. Thank you. Bye.